Joining us right now with some potential picks for your portfolio is Michael Landsberg. He is the CIO at Landsberg Bennett. And thank you for coming in today. It's really good to see you, Michael. Let's talk a little bit more about what you're seeing overall. You say that basically you've been pretty impressed by how the market has performed during what's happening in the Middle East.
I mean, considering how bad it's been, I mean, we're down, 6% from highs, and we only got to 9%. It's not even a correction, never mind a bear market. So I'm either impressed with the fact that it's been, so good or so orderly, or a little bit of concern is, have we really priced in enough this time?
Which one? I mean, those are pretty two different outlooks. I think we're all trying to figure out which one is it.
Yeah, I've kind of opted for the second one. I think part of this was I was here about a year ago during the tariff tantrum, and I think what happened was most of Wall Street took their numbers down basically to 0% earnings growth and missed a couple quarters. And I think now they're like, you know what, we're not going to do that at all. And I think it's somewhere in between. And I kind of liken it to being on a foggy road. You probably should tap the brakes a little bit. Last year, people pulled over the side of the road and the market went by, at least institutionally.
Right.
And now they're like, well, we're not stopping at all. We're going to keep our allocations right where they are.
Because they always remember
They remember the fact I missed last year and I don't want to miss it. And I think there's something to be said for being in the middle, going a little slower right now with allocations, making sure because this could drag on. We don't know.
The Mag 7 has been the place where everybody's gone. You say it's a really crowded trade at this point.
I mean, it made a lot of sense. And obviously, it's still some of our larger positions, but we have probably half the weighting. I mean, when I look at it, the Mag 7, it made a lot of sense when earnings growth was triple everybody else, the other 493. Then it was double. By the end of this year, it's going to be the same growth rates. And I think the 493 is where you want to look. I mean, Mag 7 peaked as a group on Halloween. We're in April. Yeah. So that's a long time of not having any real returns. And I think there's value other places. And I think that's where people should look. And they're under allocated there. We know everybody has Mag 7 names.
Energy has been a huge play. One of the names that you like is energy, but it's more of a tangential energy play. It's Enbridge.
Yeah, part of the issue with some of the names is I don't like when people come on shows and they give you something that's up 100% already. Well, yeah. Great. That doesn't help me at all. It's already had a big move. Mm-hmm. Enbridge is a lower beta story. A Canadian-based company. They've got a lot of miles of distribution. I think that's another way that you can play it that hasn't already had this big move. Because as you said, we've rallied for 5 or 6 weeks in the space. It's tough to be that last person in. We try to find some things that haven't already moved to be able to put some money to work. And I think a lower beta is kind of where we want to be in this environment.
What about LabCorp? This is the second largest clinical laboratory in the United States. If you look at it right now over the 1 year, it's up by about 29 or 22% over the last year.
Yeah, I like this story. We actually like both of them. We like the number one and the number two. I think people are taking more ownership of their health in the last couple of years, getting their own tests. And there's a lot of these apps out there that you can go get your tests ordered, see how you're doing. How's my A1C? How's my sugar?
I would think that would compete with the LabCorp.
No, that's
they're doing it.
That's where they do them. A lot of times that's the Quest and the LabCorp are the ones that get the business. And I think you can really own. The reason I focused on LabCorp today, it's underperformed Quest by a little bit so far.
Okay. And finally, you like Netflix, and we all know the story of what's happened with Netflix shares.
And to me, it's attractive because it's down, 25% from the highs. When people are looking to chase things that are down, a lot of people don't own Netflix as much as we think they do. They all own NVIDIA and Broadcom, but this is an area that's not quite as owned. And their story, they're really the player. How do you displace Netflix? I don't know if you can. They're really there to stay.
I think the question was when Netflix came out and looked like it was or wanted very publicly to go after Paramount, people thought, wow, that's not what we thought of Netflix. We thought that content to have content creation through acquisition like that. Now, what do we think?
Well, I think it was opportunistic, and maybe that was opportunity for them to do that. Yeah. They still generate so much content. I mean, to me, it's just one of those things where they just generate so much. And they can raise the price a couple bucks.
They did raise the price.
Yeah, I mean, that's not going to hurt them because they're going to drive more. So I think I like the fact that they're not going to say we're never going to buy anybody. If the right opportunity comes, I don't want a CEO that says I'm never going to do this.
Still 400 billion, almost 500. I mean, Disney's 170. Comcast is under 100 billion. That's not cheap.
Size-wise, it's not, but it's still a tenth the size of NVIDIA. So I look at the businesses that are out there.
Like NVIDIA.
No, but in terms of market cap, it's still got a lot of room to grow. It's growing at 30% a year.
Media companies, we know what can happen. I mean, before Zaslav sold Warner Brothers, but it was a $30 stock, it went to $6.
Yeah.
I mean, things are changing quick. I don't know, Netflix has a better model, I guess. I'm just not sure it's worth 4 times what Comcast worth.
The issue, I think, now is sports has become basically where you want to be for advertising. Advertising revenue has changed the game. Netflix has the money to get into space. I think that they're going to continue to do that.
Pushback on making it, non-democratizing, being able to watch big games.
It's going to be tough because 95% of the big activities for advertising were sports. Right. And you're going to have Amazon, you're going to have them all buying them. They're the only ones that have the money to do that.
Michael Landsberg, thank you for joining us. We appreciate it.
Coming up.